Why do you think it is that investors seem to be giving the US economy the benefit of the doubt?
I think it's seen very much as a weather-related story, and I think if you look at the FOMC statement last night, the Fed think very much that way as well. So the market's willing to kind of write off Q1 and expect a bounce back in Q2. I think the focus is now squarely on the employment report. If we get something around 200,000, around 6.6 for the unemployment rate, the market's going to be pretty comfortable in that bounce back story sort of occurring. The Fed obviously tapered last night,
yep,
and are obviously comfortable that it is weather related. Otherwise, they wouldn't have tapered.
And you take heart in the Fed's show of faith in the U.S. economy, I guess, as do all the markets right now.
And a closer examination of the numbers, I think there is sort of a genuine case that weather has been sort of the issue. And I think, despite the GDP data, some of the numbers we've seen in the US have been better than expected and showing the bounce back.
The China PMIs just missed forecasts. Are you worried about these, given the bigger picture?
Well, I think very much so. I think China is a bigger story, ultimately, I think, in terms of growth. We've had some data on a regional GDP basis which was weaker than expected, and that raises questions about the momentum in some regions. Additionally, you've got a slowdown in money and credit growth sort of occurring. So the market's not necessarily convinced about growth being sort of 7% or above, and it doesn't look as though the Chinese policymakers are willing to take any major measures. What we're likely to get is modest measures from China.
In Europe, traditional day of protest by workers. Is there a sense, though, that things have moved on from last year? You and I have talked about the periphery and yields down there. Spain at 3%. Is that a screaming sell now?
I think the absolute levels of yields for Spain and Italy are too low. I think the core view that we have is that the market will look towards Fed tightening next year. And as we get into the summer and the autumn, that will gently push up US yields, and we can see cumulatively a rise in US yields. If you look at all of the long-term correlations, all markets apart from JGBs are correlated, and that goes for Spain and Italy as well. So we think that these levels are in absolute levels, not necessarily spreads, but in absolute levels, extremely low, and likely on a 6 to 12 month basis to be 50 basis points or more higher.